Welcome, ladies and gentlemen, from me, Guy Monson, to our regular 6-minute strategy summary. Last week, President Biden hosted world leaders to his climate summit to announce new targets for greenhouse gas emissions. The US announced a target of a reduction of 50% by 2030 from 2005 levels. This was met by a series of other countries announcing similar targets, all of them on much tighter time schedules than we've seen before, waypoints, if you like, on the journey to carbon neutrality. These announcements are dramatic. Some of them in less than 10 years will require huge disruption to business models, huge disruption to power generation, to transport networks, to industry. What does this mean for financial markets? What will it mean for bond yields? What will it mean for equity opportunities? That's what I'll be looking at in the slides ahead. Let's begin by looking at world equity markets for the year to date. The S&P 500 hitting a new high on the back of some extraordinary earnings numbers. With 50% of companies having reported, it's one of the biggest beats versus estimates that we've ever seen. That's left emerging markets and world equities up around 8%, an extraordinary difference to gilts down 7% and gold down 8% as returns fade. In terms of world equity style, value is still outperforming growth, and the VIX index, volatility of markets, continuing to quietly decline to around about 17. So let's move from the very short term to the very long term. Let's move back 1200 years to 812 AD in Kyoto in Japan. That was the date when the imperial court first recorded the peak of the blossoming of the cherries that are so famous, the cherry blossom that's so famous out there. This year, the peak bloom was March the 26th, the earliest year ever recorded, after 9 years of early flowering. Now, what's causing this? To an extent, it's the buildings around the gardens, but much more importantly, it's an impact of global warming and the effects of man-made climate change. Why is this important this week? Because, of course, Biden, on Earth Day, the 2nd of April, assembled a summit of world leaders. As I've indicated earlier, the US made some ambitious new targets, promising 50% reductions in greenhouse gas emissions by 2030. China promised more coal reductions. Japan 46% emission cuts. EU and the UK particularly ambitious, 55% reductions by 2035 and 78% reductions by 2035 respectively, all from 1990 levels. Now, these dates are not directly comparable, but they show the ambition that is now flowing around the world, and particularly the tighter timescales that we're now operating in. So let's look at that in a little more detail. This shows the submission from the US to the UN of their likely trajectory of greenhouse gas emissions. You can see the peak in 2005. Today we're 17% below that number. By 2025 we've got to be 26% below that number, and by 2030 we've got to be 50% below that number. You see the scale of the change. Let's break that down sectorally, and you can see the transformational effects this is going to have. In grey, the power sector is going to bear the brunt. Generation, renewables, transmission. Then transport, particularly autos and trucks, and the revolution of electrification. And finally, in residential, industrial and commercial, still sharp falls, all traumatic for many business models. So we've heard some huge spending commitments this year already in response to the pandemic, particularly from President Biden with his American Families Plan, his American Rescue Plan and his American Jobs Plan. But so far, the 14.6 trillion the world has spent in response to COVID has not been focused on green issues. Of that 14.6 trillion, just 1.9 trillion was for long-term recovery, things like railways and infrastructure. And of that 1.9 trillion, only 341 billion, as estimated by the Oxford Smith School, was actually green spending likely to reduce greenhouse gas emissions. So the answer is, despite this massive spending boom, we're still in the infancy of climate mitigation. So what do we expect going forwards? Well, we expect a huge surge in climate spend. On the right-hand side, you can see at the moment that's been growing at 8% as a compound annual growth figure. We expect that to almost triple to 28%, or more than triple to 28% per annum going forwards. And that's going to put huge pressure on manufacturing, which is already in some areas experiencing shortages and capacity constraints. I show there on the left the global manufacturing PMI, that's the indicator of sentiment of manufacturing. A number above 50 is expansion. That is already at a 10-year high before this climate journey has begun. So what does this highly ambitious global climate agenda mean for asset allocation and for your portfolio? Well, first of all, massive demand for capital will mean massive bond issuance to support what will after all be the biggest capital expenditure boom since World War II. Green bonds, government bonds, corporate bonds, issuance will all put upward pressure on bond yields and be a challenge for the asset class, hence our underweight. In equities, there'll be huge opportunities in the industrial sphere, power generation, automotive and transport, and smart buildings. And that will cause perhaps a shift in market interest from the technology-focused world we've seen to a more industry-focused world. Infrastructure as an asset class will be key. The inflation plus returns that it can generate for investors in renewables, in smart power, in transmission grids, in industrial transformation will be a valuable alternative to bond markets. That's the positives. Where are the challenges? Well, first of all, simply the physical manifestation of climate change, rising heat levels, storm and extreme weather, and flooding. Secondly, of course, many businesses will not be able to adapt. Stranded assets, problems in their business models, simply being slow to react could be very painful for shareholders. I hope these very preliminary thoughts are helpful and give you a guide of some of the influences that we think will drive your portfolios as a result of climate change in the years ahead. Thank you.